Okay, so I'm not going to waste any time. Now, there are two ways in which the market moves, right? So the market moves in a consolidation form, or the market is trending. So first of all, it's either the market is moving in this form, which is consolidating, which means the market is not going anywhere, or the market is trending, right? These are the only two ways in which the market moves. Either the market is consolidating, or trending down, or trending up, right? So it can also trend up this way. You understand, right? So so today our focus is how to trade markets such as this, right? And this. You understand how to trade a market that is trending. Right, now first of all, you have to know that there are several ways in which the market trends. And I'm going to demonstrate them now. Now the market can trend in this way. If you've been in the market for a while, you realize that the market can trend like this, creating higher, lower highs, lower lows, like this, or it just does one big sell and this, and just one big sell, right? These are two types of trends. You understand? This is for the downtrend. The same thing goes for the uptrend. Now the first one is called a volatile market, right? The first one is called a volatile market. A volatile market. So we'll just name it a trendy volatile market. Right, and this one is called a trendy quiet market. Right, now these ones you can see trendy volatile market and trendy quiet market. Okay, so when we move to the chart, this is how they look like, right? For a trendy volatile market, you can see it for yourself. You can see that what the market is moving upwards, right? It's moving upwards, but what is it doing? It's very volatile, moving up and down, very, very volatile, right? So that's the trendy volatile market. And also the quiet market, you can see this is also moving upwards, but what do you see? That the market is moving upwards very quietly. You can see there is almost no bend, right? There is almost no bend. It's moving very quietly. You understand? So this is how they look like in the real market. Now there are several ways to trade both markets. Right, there are several ways to trade the volatile market. There are several ways to trade the quiet market as well. So I'm going to teach how to trade. Firstly, we are going to look at how to trade the quiet market. Then we move to how to trade the volatile market. Okay, so for the trendy quiet market, I mean, there is not a lot of pullbacks. So how you trade it is very differently. Right, you know pullbacks, right? Pullback is when the thing breaks out and then comes back before moving. Right, this is a pullback. Right, this is a pullback. Right, there are not a lot of pullbacks on a quiet market. So it moves straight like this, then does some small pullback, and then just continues to move. Now, because of this, you can't. If you say you're going to wait for the pullback to happen before you enter, you are going to miss out. You understand? You are going to miss out, right? And also the pullbacks that happen as well, they are very short for the quiet market. They are not like this. No, they are very, very short, right? They are very, 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 very short. So this is how to trade it. It's very, very simple. Now you are going to have to wait for something like this to occur. Right, this is for the downtrend. Let's look for the uptrend as well. So something like this. Right, so you have to wait for something like this to occur. I mean, sometimes small of these will be occurring along the quiet market trend, right? So the only thing you have to do is very, very simple, right? You would have to wait, right? When the market, assuming the market does this in a downtrend, it does this, right? And it's now about to move, right? It's now about to move. Now, this is what you're going to do. You would have to wait for this low to be broken, right? Then you place your trade. So you place your trade somewhere here. You understand? So you have to wait for that low to be broken. So when the market moves like this and then breaks this low, as you can see, it breaks that low, then you can find a trade and what? Enter. You can enter a trade here for sales. You understand? So then you can put your stop loss above it, above the previous, because usually it will just move. It can also create another one here, right, before moving. So as soon as you see it's breaking the low, what do? You enter the trade there. And then that's how you trade a quiet market. It's quite very, very simple. Let's look at it from the buying perspective. From the buying perspective, you have this, right? Very quiet, right? How you enter is very, very simple, right? When the market is moving and creates that tiny low, what you are going to do is you have to wait for it to break, right? You have to wait for it to break the low. Yeah, you have to wait for it to break the low. So when the market reaches here and it attempts to break it, you just enter your trade somewhere there, like that. You enter your trade as soon as it breaks the low, and then the market can continue moving up. So it forms another one, and you wait till the high, it breaks the high, You wait for it to break the high again, and then you go. You understand? Wait for it to break that zone, and then you move. It's a very, very simple. So you keep adding on to the trade till the trend is over, right? Usually the stop losses will be somewhere here. So while the trade is moving, you can be trailing the stop loss. Trailing means you can be moving the stop loss as the trade goes. You can be moving the stop loss as the trade goes. You understand? You can be moving the stop loss as the trade goes. So you can be moving in this way as the trade goes. Yeah. That's how to trade the trendy quiet market. Now, to trade the volatile one requires some form of skill, you understand, and patience, right? You require skill and patience. Let's practice it in the actual real market, right? You can see that this chart is actually a gold chart. So you can see that when the market was moving up, it formed a little bit of a bump here. So if you had drawn your zone over there, you can see that as soon as the high got broken here, that's where the high got broken, you could have entered for a buy and the market would have continued to buy, right? It formed another one here, right? It formed another one there, and as soon as the high got broken, you could have entered another one for a buy, right? Yeah, all of them trailing your stop loss below that, trailing your stop loss. You understand? So by the time you finished the second one, you realize that there was another one also here, right? There was another one also here, which I almost missed, right? So that one as well, there was a break, you enter, and so before maybe the trend will finish, then you would have probably 3 of those. So you'll be trailing your stop loss just like that, right? Now let's look at the volatile trendy market. All right, so for the trendy volatile market, we all know how it moves, right? We all know it's very, 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 very volatile. I mean, it moves, comes back, right? You understand, right? So how to trade it is also very simple. You understand, but for the trendy volatile market, there are several ways and different variations in which you can trade it, right? So one of the way is this. One of the way is using support and resistance levels to enter the market. So this is an example, right? So let's say the market does this, moves back and comes back here, and it moves back, right? We all know this is a zone here, right? So once this market, you know, reaches back to that zone, you can look for maybe selling opportunity and sell here, right? Put your stop loss about this and sell here, then it can continue doing what it does and going. So that's the support and resistance. Let's look at it from the buying perspective, right? So we have this, so you can draw your zone here. When price gets here, you buy at this level, put your stop loss below here, and then you are looking for the market to head all the way to the top. So it does, and does back those things, right? So there's one way to trade a volatile market, right, using support and resistance. Now there is another way as well you can trade it using trend lines, right? So let's say you have something like this, right? We can draw our trend line. So it moves back to the trend line. What can you do? You can buy. Over here we can place a buys here, right? Put our stop loss here, but we can place buys here, so it will move all the way to the top. You understand? So that's one way of entering the trending volatile market, right? Here sometimes the support and resistance might not help you, right? So you have to, it varies a lot. You know, when we draw the support and resistance level, you can get sometimes it does not help you, so it varies. I've showed you how to enter when the market is respecting the support and resistance. I've showed you how to enter using a trend line as well. So in the real life market, see that it is obeying the trend line, right? For this one, you can see that it's obeying the trend line all the way here, right? It's obeying the trend line, and it's also obeying a support and resistance level, I think so. For the trend volatile market, there are different ways you can enter. All you have to do is find out which one is obeying. If it's obeying the trend line, you use the trend line. If it's not obeying the trend line and it's obeying support and resistance levels, you use it.